Welcome to Real Clear Radio Hour. This is your host, Bill Frezza. While 2013 was the year when Bitcoin captured the imagination of speculators, central banks, and the financial press, it's by no means the first digital currency, nor will it be the last. Here today to give us some insight into the past, present, and future of this strange electronic medium is Doug Jackson, who some have called the godfather of digital currency. Doug was the chairman and founder of eGold, a storied digital currency provider launched back in the roaring 90s. He's currently an advisor to Septus, a new digital currency startup attempting to pick up where eGold left off. And I might add, Doug is also an expert at being regulated out of existence through indictment, serving 6 months of home detention with an electronic monitoring bracelet after a plea bargain imposed by the U.S. Secret Service, who raided eGold and confiscated its assets. Doug, welcome to the show.
Well, thank you. It's a pleasure to be here.
Doug, let's start back at the beginning. David Chaum's anonymous digital cash, which first came to the attention of the digerati. When was it, back in the 1980s?
I believe it was at the mid-90s, and it was very prominent at the time. I remember him making the cover of U.S. News and World Report.
Right. I mean, the papers went back to the 80s. I guess we had to wait for the Internet to be ready for his technology, and I think he launched in maybe 94, about 20 years ago. I mean, how was that received at the time?
My understanding is that it was not received well commercially. I had some contact with the only domestic U.S. bank that was actually issuing a medium for commercial use, and they at one point related they'd had a grand total of 2 transactions during the entire time that it existed. Both of those were to pay for a admission to the 1998 Financial Cryptography Conference in Anguilla.
I think I remember meeting you at one of those a few years later. I think what thrilled people at the time and what may have framed the issue of digital cash, much to your woe, was the anonymity of digital currency. Talk about that a little bit and why that was a key part of DigiCash.
Well, anonymity has always been sort of a dirty word for me. Because we were accused with eGold of fostering anonymity or offering that. Whether that was one of the goals of DigiCash is not perfectly clear, in that there was not recipient anonymity even envisioned. There was payer anonymity, but it's hard for me to understand what the commercial case for that ever really would have been. But with DigiCash, I think the thing that really limited their acceptance, rather than the offering or not offering of anonymity, was you had to have a software client. It was difficult. You had to be technical. The people that were trying it, they were messing with a play money version of it. Mm-hmm. And many people felt that was successful. Like there was widespread adoption among cryptographers and technical kind of people around the world that enjoyed passing that back and forth. Where it ended up falling down was, again, when they tried to have it backed up with an actual asset portfolio and do it like monetary liabilities, there was no embrace at all. So the embrace did not come from the mainstream because I don't think anybody understood it. They didn't see that it solved any particular problems that existed.
It was a curiosity.
Now, there was somewhat of a problem at that time, though, because when the Internet first went commercial in the mid-90s, until SSL, at least, there was a difficulty of how do you pay for things online.
And that's the secure socket layer that allows you to have some level of encryption when you're paying for things and putting in your credit card.
Yes. And in fact, it was the availability of SSL that caused my company, eGold, to go with a internet browser instead of a specific software client that you would have to install and configure and mess with.
And that was a couple years later, right? eGold was launched in 96?
Yes, we went online in November of 96. And so, in a sense, the technology was simple because we were just piggybacking on tools that were already out there. So one major aspect of that was the possibility of channel security through SSL. And then, of course, we were taking advantage of the fact that the Internet existed at all so that you, for the first time, had a global capability of communicating. And, of course, computing power had come way down by that time.
The time was ripe.
The time was ripe.
And what motivated you to launch eGold? What problem were you trying to solve?
Initially, my concern was when I looked at contemporary and historic monetary systems, I thought that I observed a flaw with all of them.
The flaw is they print too much money and blow up. It's usually what happens.
Well, that's the end game with them, but I felt that at a more abstract level, it came down to discretion. For me, that was the Achilles heel of all monetary regimes going back to the pharaohs as far as I was concerned. Because when you have that discretion, and of course when that discretion is exercised by a sovereign, there is that bias that leads in the direction, like in the continual tension between creditor and debtor, the sovereign is always going to weigh in on the side of the debtor because they borrow money.
And there's more of them, and they vote, particularly in democracies.
Yes. And so I wanted to come up with a system that was completely free of discretion, that instead of having a policy was a matter of implementing a contract, something where there's a firmly described declaration of liability and no wiggle room. And then I wanted to combine that with transparency so that anybody could see at any time whether or not the issuer, the one that was taking on these obligations, was actually honoring them.
So you were trying to build an electronic hybrid, something that took discretion out of the system, functioned with the rule of law, had a backing of known physical commodity, namely gold, which has had trust over the ages, and yet was able to expand rapidly and allow for remote payments. Is that a fair assessment?
Precisely so.
Okay.
That was exactly our starting point. Now, that became refined over time, however. I was strongly influenced around 2001. Lawrence Myers at that time had come out with an analysis for the prospects of privately issued money. And he had a formulation that I thought
which is a lot of history behind private money.
Yes, but he was looking at modern forms, and I think in particular was looking at the possibility of the electronic monies that were coming into play. And he had a formulation that I really admired and which guided my thinking. He was describing that for a private money to gain traction, it would have to achieve finality of settlement and freedom from default risk. His contention at that time was that only a government had the resources to achieve those. My view was that we could achieve those and that we could achieve them better. That in both cases, both that finality and that freedom of default risk rested on a government guarantee. Ours rested on a 100% reserve of physical gold.
Let's move to the moment in time where eGold was taking off. I understand you were competing with PayPal. They were both new forms of being able to do digital transactions, particularly for internet shopping, whether it's Amazon or eBay or anything like that. You folks were neck and neck rivals for a while. How did the two differentiate? Where did you go your separate ways? PayPal went on to become a great success.
At that time, I felt like we were offering advantages that PayPal could not offer. Primarily, it was a matter of we could offer lower cost, and we also had strong non-repudiation. That is, you get paid and you stay paid. Since PayPal at that time had already modulated into becoming sort of a credit card intermediary, it was impossible for them as the middleman to
guarantee no chargebacks.
Yes. Now, why did they pull ahead and we fell behind? We fell behind, I believe, primarily because of a flaw that I had designed into the system. And of course, hindsight is 20/20, but the vulnerability that kept us from growing and the thing that ultimately made us vulnerable to the attack that happened was our lack of proper customer identification.
So let's get on to that in a minute. Partway through eGold's existence, 9/11 happened. The Patriot Act was passed. And at that time, it became a crime to operate a money transmitter business without a license. Now, this clearly had a great impact on you, though it took some years for that to unfold. What was the trajectory of eGold as a money transmission business and your attempts to get a license?
We didn't make an attempt to get a license. at that time, and this is my other fundamental mistake, I tried to interpret those laws just based on the simple English.
A lot of people have come in cropper trying to believe that laws were simple English.
What I didn't know, and what I didn't come to understand until long after our indictment and pleading guilty and so forth, is the only way to know if you were a money transmitter was to approach every state, because that is something that's regulated at the state level, and either apply for a license or ask for a determination as to whether or not a business is a money transmitter. That seems odd, but there is no other way of knowing, because the law was written in a way
that wasn't clear.
It was not clear.
But you did have quite a lot of interaction with regulatory authorities and law enforcement officials. You were engaged in all sorts of efforts to apprehend criminals that were using the system, whether they were money launderers or child pornographers. Clearly, you were well known to the law enforcement community and the regulatory authorities. The growth and existence of eGold was certainly not a surprise to them, and you made no attempts to hide it. In fact, I don't know when eGold reached its peak, but I understand at one point you were had more gold in circulation than the official reserves of Canada and Mexico. This was not a backroom kind of thing. This was visible to everyone.
That's correct. And it was very puzzling and distressing for us, especially in the early 2000s, that we would see ourselves characterized in the press as anonymous, untraceable, and inaccessible to law enforcement.
Do you think this was a hangover from the David Chum Digicash days?
No, I think it was something more sinister than that, but I'm not prepared to defend that thesis right now. But the irony is that we never sought to offer anonymity, and we couldn't have possibly done it anyway. We were, in fact, the most traceable payment system that had ever existed before or since.
All completely auditable and subpoenaable.
Auditable, subpoenaable, discoverable, you name it. And so what we would repeatedly encounter was that somebody might see in the newspaper, let's say a bad guy, falls for that and thinks, oh my goodness, this is anonymous or this is criminal friendly. And so they undertake to create an account, and perhaps they even use false identifiers where they call themselves Mickey Mouse at 999 Pine. That tended to be the career-ending, game-over mistake for somebody that was foolish enough to believe that. And the reason was that we had a single consolidated database, so that to touch it was like to touch a spider web.
Well, why wouldn't, if that's the case, why weren't you befriended by FinCEN as a honeypot to just attract and catch all these guys?
I'm not sure that we weren't, and some of the most productive cybercrime investigations of that decade were done by our own in-house investigators. It was very puzzling for us because we began reaching out to law enforcement as early as '99. The first time that we saw somebody doing something that we regarded as off-color or questionable, we began reaching out to law enforcement. By the time of our initial asset seizures in December of 2005, we could tally up over 300 instances where we had assisted in investigations. And generally speaking, that would be in response to a subpoena, although many times it would be subpoenas that we had helped to draft or which we had solicited. It was, in that sense, almost like a honeypot for catching bad guys.
So how surprised were you when they knocked on your door and burst in to seize all your material?
I was very surprised, and in multiple respects. One aspect was we learned early on that we were being accused of operation of an unlicensed money transmitting business.
So you knew that was an active risk.
Well, we were in the process of trying to get a determination. Now, the mistake that we'd made was we were trying to get that at the federal level. Like, for instance, in March of 2005, we were in our third year of a never-ending IRS audit. Some of the questions and the direction that audit was taking made us feel, or made our counsel feel, that they were more suitable for the context of a BSA examination, that is a Bank Secrecy Act examination. And so we had actively asked them to do it using that formalism. That proceeded to the point where we were dealing with the most expert people in the IRS, and we were trying to get a determination so that as of May of 2005, That question had been posed at our behest by the IRS for FinCEN, and that determination was pending when all of a sudden there's this regulation by indictment.
And then things unraveled pretty quickly after that.
Not necessarily. Things did not unravel quickly. Our best year, our most profitable year, was 2006.
After the indictment.
After the indictment. Growth stopped, but it stopped at a relatively high level.
Mm-hmm.
And so that's when the circulation reached its peak. That's when transaction volumes reached their peak. Now, the hindsight part was, had we understood, that would have been a perfect time with the initial asset seizures to approach the government and say that, oh my goodness, we did wrong. Why, yes, we concede. We can see now
in retrospect,
that we must have been one of these things. Yes. Had we known there was the desirability or the need or where things were going, we could have tried to get a deferred prosecution agreement, any of that sort of thing.
But you stood on principle.
Well, and it was more ignorant than that. I thought that they were on trial. They had taken our money. I was convinced at the time that they had been misled and that they were going to be embarrassed when they discovered the facts of the circumstance.
You thought justice was going to be done, and that was a big mistake.
I don't want to come on too strong, to dwell on the injustice or that sort of thing. I didn't even like these trips down memory lane from the standpoint that I'm trying to take advantage of lessons learned and use that to inform what we're trying to build for the future.
Then let's move ahead. Clearly, at some point, the gold was all confiscated. And how much of it has been returned to its rightful owners?
Okay, the gold was never confiscated. And this is an important point.
That's interesting. It's funny because I've been reading about this for days, and this is the first that I've heard that.
Yes.
What did they confiscate?
The e-gold, the money, not the reserves.
Where were the reserves?
The reserves were in the appropriate sort of custodial facilities. And the point that I want to make is that one aspect of our governance model stood and I think was ratified as being robust.
They never got their hands on the actual gold.
There was the attempt made, but the gold was not our gold. The gold was titled to a special purpose trust that existed for the stated purpose of holding those reserves for the exclusive benefit of the account holders.
So rule of law held firm.
It did.
Well, that's a happy ending, at least for the people who had their money in there.
That part was good. Now, the challenge, though, was when we could no longer operate, because the agreement that we reached, the plea agreement, we pled guilty to crimes, but it was with the understanding that this would enable us to put it behind us and then to come into compliance. And so the plea agreement reads more like a DPA or a deferred prosecution agreement.
They threatened to put you away for 30 years and fine you hundreds of thousands of dollars,
well,
right?
There's those unsavory aspects, but the main body of the agreement specifies the steps that it would take to come into compliance.
Right.
And so it called for registration with FinCEN, licensing by the states, the implementation of a customer identification program, anti-money laundering, all these sorts of things that would be required of a regulated financial institution. And our understanding was that we were going to essentially be rehabilitated and able to go forward.
But it was too late at that point.
I don't know. I'm not sure if anybody understood that pleading guilty to operation without a license
made you ineligible to get a license.
It made us ineligible.
Yeah. But they did lay out a roadmap.
It laid out a roadmap.
All right, we're going to come back to that.
Yes.
We're going to come back to that. So let's put this behind us and move to something that's a little more contemporary, which is Bitcoin. There's been a tremendous explosion in the news, at least in the last year. More and more people are following it, wondering where it's going. It's a very different kind of system. My understanding is it's a peer-to-peer system. There is no central repository, which makes it much more difficult to stage a raid in the middle of the night and shut it down. There is a certain degree of anonymity. Maybe I could let you explain the differences between Bitcoin and the digital currencies that have come before.
That's a tall order. The biggest difference that I see is from the definition of the money itself. With e-gold and anything that I regard as real money, that circulating medium is somebody's liability.
Mm-hmm.
It resides on a balance sheet. Like if you look at another form of real money, the United States dollar, the base money sits on the liability side of the Federal Reserve's balance sheet. There's assets behind that. There's very valuable assets. It consists of treasury securities. These days there's a lot of mortgage-backed securities. There's some underlying reserves, which include a considerable amount of gold. With a currency like Bitcoin,
there's no base money.
The nomenclature that would seem more appropriate would be play money, from the standpoint that there is no underlying reserve value. Now, why does that matter?
So it's a transaction token, not a store of value.
Well, but then
it seems to be working as a transaction token.
Yes and no, and I can come back to that. The fallacy that I see at play is the numbers that are money fallacy, and that's not new. The idea comes that like scarcity in and of itself leads to value.
Mm-hmm.
Now, the problem with that is, okay, let's take somebody who has a scarce medium and there's nothing but the scarcity. Let's take somebody else who has something that's also got a lot of sizzle and is fun to use and seems technologically sexy, but it has an issuer where every bit that's been spent into existence is backed by an asset portfolio that gives that issuer the wherewithal to be able to buy back every bit that's ever been spent into existence.
Right.
That asset portfolio serves as a floor under the exchange value for the currency. In the case of e-gold, it was virtually impossible for e-gold's exchange rate to fall below the value of the underlying assets. Otherwise, that would create an arbitrage opportunity for somebody. There is no equivalent floor when you're dealing with play money.
So maybe virtual currency is a better word rather than digital currency.
Well, I like to use a distinction of real money versus play money. I don't like the word virtual currency very much. I never really cared for digital currency. I can define real money if you would like. But again, the critical distinction between what I say is play money versus real money is whether or not there's an underlying asset portfolio. Now, oftentimes when you see people describe this sort of scarcity alone causes value, it's based on a misunderstanding of things like the dollar. Because you'll see people say, even in print and in various analyses, that, well, after all, the dollar is created out of thin air. That's not right. That's not true. The dollar is not created out of thin air. The dollar is created by means of open market operations, where the balance sheet of the Federal Reserve is symmetrically expanded. And so, yes, new dollars are created.
But there's a pyramiding effect that takes place both through fractional reserve banking and through the shadow banking system by using leverage.
But I'm speaking primarily right at the moment through the base money level.
Okay.
But at every level, there's a balanced balance sheet. If we're talking about broad money, banks don't create money out of thin air either.
Right. There's assets behind it.
There certainly are. Yeah. They loan it into existence, but they have a valuable asset on the balance sheet. I'll take all those treasury bonds that somebody thinks are worthless.
Or mortgages.
Or the mortgages.
You're happy to hold mortgages. Even if some of them default, there's still value in there.
Absolutely.
Getting back to Bitcoin, this is the numbers are money truly out of thin air, traded on a peer-to-peer network with no ledger system. Where do you see it going?
Well, but even that scarcity aspect, I think it gets worse. There's two aspects. One is, if indeed Bitcoin is so cleverly constructed as to be genuinely scarce,
and there'll never be more than 21 million of them.
There'll never be more than 21 million. That doesn't prevent there from being a whole lot of Me Too coins. There's no scarcity in the people that use that open source code to create whatever it is, a Litecoin or a Me Too coin.
So Bitcoin 2, Bitcoin 3, Bitcoin 4.
Yes.
You're not talking about the double spending now. You're just talking about the replication problem.
Yes, because in what respect is the second or the third or the fourth version of it inferior to the first? It would only be if there's some sort of a network effect or some first mover advantage. And even there, okay, what is that first mover advantage? Well, it is that they have
a community.
There's a community, but it also comes down to the miners, which the miners are sort of a complicated consideration right now.
And they've got real investments. Some of them are putting millions of dollars into hardware.
It's getting harder and harder.
Their electric bills are going through the roof.
It's harder and harder to do the mining. And that ends up leading to a concentration. I think you may have seen the article in the past week. There was sort of a tour of some of the largest mining facilities, purpose-built facilities with major capital investment. Now, this whole thesis of, well, an advantage of Bitcoin is it's immune to the government coming in and kicking their doors in because it's a distributed system. I don't think I understand that. I saw a tour of the 3 or 4 facilities. There's the one in Iceland. There's a couple in Hong Kong. Is it really that hard to go in and say, I'm sorry, guys, we want you to shut down? Where's this distributed
Does that destroy
aspect?
the Bitcoins? If you go into one of those operations and pull the plug, let's say one of the governments come in, they seize the whole thing, they pull the plug, they throw it in a storage bin. It doesn't destroy Bitcoins, does it?
Yeah, it does.
It does.
I think it does. And this is one of the weaknesses, as far as I'm concerned, as a transaction medium. Let's say that you're an online merchant and you receive a payment. You have no idea if it's real. You have to wait until it's been validated. That validation by a miner. Now,
and that happens in seconds, right?
My understanding is it currently happens in about 20 minutes.
Oh, really?
And in some cases longer. Now, what a throwback.
Yeah, 20 minutes is a long time.
That's a long time.
Down the block with your goods.
Well, and you've got, let's say that you're a big online merchant that has multiple threads. Do you really want to keep each shopping cart thread open for that? That ties up a lot of resources. I mean, what a throwback. Like 10 years ago, we could offer immediate settlement at a very minuscule cost. You'll see the example people talk about, like splitting the dinner tab or something, or being able to spend $10 worth of one of these currencies to somebody. Well, we could do that 10 and 15 years ago, and it cost the recipient a dime's worth to receive that $10 worth. But it was instantly settled and non-repudiable.
So what accounts for all the excitement with these flaws, which you don't hear talked about very much?
The excitement comes from the fact that it's going up, up, up.
Okay. So it's a speculator's story right now.
I think it's a speculator's story, but even that's not a good justification for money. Money is not about, you don't get,
right.
Money's not an investment. Money is what you buy investments with. It's the stuff that you have in between the time that you're in investment.
Project forward a little bit. What's Bitcoin going to look like when it blows up?
I think the problem that they're going to have is this marginalization. Because there really is some degree of anonymity, and you'll hear people try to paper over that or to obfuscate that.
Well, there's been a lot of press on Silk Road, and the same problems that plagued e-gold play in Bitcoin. There's a lot of money laundering and illegal activity going on.
It's claimed that there's traceability because there is this permanent record in the blockchain of the unique identifier of the wallet and the unique identifier of the block. That's a far cry from traceability. It's almost too complex to try to compare that with the exquisite traceability that eGold offered. But let me just say that, for instance, the techniques that one would use to remain anonymous using a system like that would be very effective.
A lot easier without a central repository.
Yes.
So that's an advantage and a flaw at the same time.
It's mostly a flaw. There's not a commercial advantage to anonymity. People want privacy. People don't want to have their identifying information in a lot of different databases where it has to be safeguarded and where it can be compromised, as like these events that happened last week with a major retailer. But I'm not sure that anybody's willing to pay up or that puts a value on anonymity.
Actually, you make a good point. I mean, the Swiss banking system for hundreds of years sold privacy. They didn't sell anonymity. I mean, they've been driven out of that business, but it did have a long-lived place in the market. So the beginning of the end of Bitcoin is when Bitcoin 2 and Bitcoin 3 and Bitcoin 4 start catching on.
Another thing that may be the end, so to speak, is when a better system is available that offers the genuine advantages without what I regard as the disadvantages.
That's a perfect lead-in to the last part of our conversation, which is, what does that system look like? Tell us a little about Septus, which we've heard about. Not many places. I read about it first in Zero Hedge. When it came to my attention that you were involved, I started looking at it. How have you applied the lessons learned from eGold, from DigiCash, and from Bitcoin in putting Septus together? And why don't you tell us how that works?
First off, I do need to say that I am not in control of Septis, and I'll never be able to have a controlling position.
Understood.
Okay. I am pleased to be able to advise it and to have a hand in the development process. What we've tried to do is to blend the monetary principles of e-gold, that is, of a 100% reserve of physical gold, of a primary dealer mechanism, some of the governance arrangements of a special purpose trust that holds the underlying assets.
Which has been proven,
that
even under assault.
Withstood, yes.
Okay.
But we want to merge that with a very robust AML, that's anti-money laundering, and regulatory compliance model.
A better front end.
A better front end. What you can do by implementing those features is to offer greater security.
Better customer service, better user interface, still backed by gold.
Yes.
In a depository trust warehouse, which has been proven to withstand even confiscation by the Secret Service. And I imagine you're going to be applying, or I should say, Septis is going to be applying for licenses this time.
Yes, that's correct.
Any projections